Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Mullen Automotive's MULN stock, then we're going to talk about Sofi Technologies' SOFI stock, followed by Tesla stock, and then finally we will end with the latest news updates on Palantir Technologies. Regarding Mullen Automotive, many investors are excited for January 24th, which has increased their overall share price, and many investors believe this company could actually go through a short squeeze, causing the overall share price to increase very rapidly. After that, we will move on and talk about Sofi Technologies and how they have recently released a report saying that there will be a conference call to discuss Q4 2022 results as well as their full year 2022 results on Monday, January 30th, so investors can understand more about where their fundamentals are and if this company is still a good buying opportunity. After that, we'll move on and talk about Tesla and how Tesla's TSLA shares have recently been upgraded by Edward Jones. So we'll determine and dive into what this analyst has to say about Tesla. And then lastly, we will talk about Palantir Technologies and what professionals believe about their particular stock. Remember to go and smash that like button for more videos just like this one on any of the companies that I previously mentioned. Subscribe if you are new, and without further ado, let's jump right into today's stories. Mullen Automotive is an electric vehicle manufacturer, and their share price has recently increased by around 24.59% up to 42 cents. Many investors like this company because they not only specialize in the electric vehicle market, but they believe this company's share price could actually surge much higher than just 42 cents per share. And as of right now, you can see that they've been on a very positive trend to where a mini short squeeze could be happening with this company. If you're not familiar with this company, Mullen Automotive is a startup electric vehicle company that is trying to make a name for themselves. However, as of late, the share price has been surging upwards by more than 14% over the last couple of trading sessions, which is somewhat interesting because the Mullen stock price has been falling pretty substantially over the last couple of months. However, many investors do believe a short squeeze could happen by either a catalyst coming up or by investors rushing in and buying more of this stock, which is going to offset the very short interest causing the stock price to increase. One of the reasons why investors believe this is that there's a $90 million potential catalyst on the horizon for this company. So let's dive into this particular catalyst. Well, Mullen's upcoming $90 million payout of preferred stock in Q1 of 2023 has investors very excited. And here's the details on this. Essentially, $90 million worth of preferred stock will be available for purchase in the form of Series D preferred shares on January 24th and again on February 24th. To where investors are going to be able to purchase these shares for no higher than $1.27, and they won't go any lower than 10 cents per share. And this has caused the overall demand for the MULN stock to increase, which has caused somewhat of a small short squeeze, or just by investors increasing the demand for this company, their share price has increased pretty substantially. However, overall, I don't own any MULN shares. I think this company is still extremely speculative, and until Mullen proves themselves, I will not be investing into this particular company. Up next, we're going to talk about Sofi Technologies and why investors are talking about them. So Sofi Technologies is a financial technology company that essentially operates as a digital bank. Right now, their shares trade for around $4.63, while experts believe the company could surge to $7.33 over the year of 2023. And the reason why investors are talking about this right now is because they recently issued a date where the company will go over their Q4 results and their full year results for the year of 2022 since it's ended, and that will be on Monday, January 30th of 2023. It's going to be earlier in the morning at 8 a.m., and if you want to listen to that, or if you want to see any of the results, you can go on their webpage here on screen to view those results. Now, overall, I think this is going to act as somewhat of a catalyst for this company because we're going to have their management and CEO say some stuff about the past year, what they project for the future year. They'll answer some questions, and this could give investors more confidence to invest into this company long term based off of these past results. So if you are a Sofi investor, this could be a small catalyst that you should look forward to, because overall the year of 2022 was pretty decent for the company, but not necessarily for their stock price. Sofi Technologies is going through an interesting phase where their share price is dropping, but the overall fundamentals of their business is actually increasing, which means that investors are getting a great buying opportunity as long as they buy the stock price cheap. Now, this doesn't mean that the stock price will just continuously go up and it won't fall anymore. Many professionals believe this company could fall to as low as $3.36 and or lower, while other experts believe the company could surge to $7.33. Now, what I think is, because I do own this company only around a 4% allocation, is that over the long term, such as the next decade, I think the company is going to be worth more than $4.63 in the next 10 years. So I've nibbled at this company, and I am pretty confident just to hold this company for the next 10 years. And even if it doesn't work out, I'm not going to be hit very hard from this company because it only makes up around 4% of my portfolio, but still I am pretty bullish on this company. There's no red flags for this company as of yet, and I believe they could start to rise once the student loan moratorium officially ends, as well as when the macroeconomic environment bounces back. So I can't wait for that to happen. Up next, we're going to talk about Tesla, which is a very well-known electric vehicle maker that you're probably aware of. And the reason why Tesla's TSLA shares are in the news today is because an Edward Jones analyst recently upgraded the TSLA share price to a buy rating from a hold rating. So this is a huge increase. Right now, the TSLA shares are trading at just $110 per share, while professionals believe this company could surge as high as $227 over the next year. Now, this is pretty interesting because as of late, we've actually seen the median price target for this company go from $250 per share, and then it dropped to $247, and now it's dropped again down to $227. So clearly, we do have multiple downgrades by analysts, which have moved the average and median price targets downward. However, Edward Jones and their analyst believe this company is a great buying opportunity right now. For instance, the analyst went on to explain, and I'm going to quote from this article, where they say the analyst said that Tesla's stock price has declined significantly over the past year, down around 70%, which to me gives us a good buying opportunity, because I've said a plethora of times in previous videos that this company was way overvalued, and once it starts to pull back, then I'll start to invest more into Tesla, and that's exactly what's happening right now. Finally, Tesla is going back to what they should be priced at, instead of them being in a gigantic electric vehicle bubble. And what's helped Tesla actually reach its true price by falling downward, which makes it a better buying opportunity for investors because it's cheaper, is mainly due to the slowing economic growth and concerns about Elon Musk's time spent managing Twitter. So we've already covered this before. Elon Musk is looking for a new Twitter CEO, and once a Twitter CEO is named, I think it's going to act as a catalyst for the TSLA shares, causing them to rise. Because many investors believe that the electric vehicle company will continue to expand globally, which will also increase their share price. And despite macroeconomic headwinds, which are not good for the company, there is huge potential still left in this company because Tesla is far more than just an electric vehicle company. The article goes on to directly quote from the analyst, where he says programs that have software or ongoing subscriptions, such as full self-driving, are especially important for Tesla, as they are expected to be more profitable. Additionally, Tesla is working to improve manufacturing efficiency and reduce costs. Specifically, ongoing design improvements with batteries should reduce costs and help to improve profitability, end quote. And these are phenomenal developments within the company internally. Their software and ongoing subscriptions is going to put more money in their pocket, and as their manufacturing becomes more efficient and they aim to reduce costs, this is going to open up a lot of savings and extra money that they're going to have laying around, which could lead to various design improvements, which could lead to newer models and or battery enhancements. So this is all very good news for Tesla and their TSLA shares. Now, some people believe that Tesla will drop actually below $100 per share, and if it does, I will start nibbling at this company more aggressively. But until then, I think it's great news that an Edward Jones analyst actually increased his overall rating for Tesla to where it was a hold rating, and now he has a buy rating on this company. For me, myself, I would say it's a buy/hold rating depending on your portfolio, your risk tolerance, and a plethora of other factors, but in general, this is a very good news development for Tesla. Lastly, let's talk about Palantir Technologies. And if you don't know, Palantir is a big data and analytics company that serves both commercial enterprises as well as government clients. Palantir is a very interesting company that I believe is somewhat overvalued. However, let's see what professionals have to say about this company. In general, over the last 3 months, we have one bullish professional covering this stock to where they believe the company is pretty undervalued right now to where it's trading at just $6.30. However, 3 other professionals are indifferent when it comes to this company, and I would give that a hold rating. So we have 1 bullish buy rating, 3 hold ratings, and we have 2 somewhat bearish ratings and then 1 very bearish rating. So I'm just going to lump these together and say we have 3 sell ratings overall. But why do people think this? Well, in the last 3 months, out of 7 analysts that have offered 12-month price targets and price predictions for Palantir Technologies PLTR stock, they have an average price target of around $7.86, with a high of $15 and a low of $4.50. However, even the median and average price target of $7.86 is higher than their current share price of $6.30. But as always, we need to make sure that we are giving a huge grain of salt to these price predictions because analysts are very rarely right, which is why I normally gravitate to the more bearish price targets, because even if the low-end bears are correct, the company still could have some juice in it, except in this case, probably not, considering that this company is still trading at a good premium. But many investors are drawn to this company for their long-term outlook, particularly in regards to the space that they're in. Data analytics and artificial intelligence, as well as machine learning, is absolutely a huge market that is transforming society and how businesses and the government operates. And they believe over the next 10 years it's going to be pinnacle to the overall development of various enterprises and organizations. So they're betting on the long term here. They're saying, yeah, I don't mind buying Palantir's PLTR shares at a premium, even though it's overvalued, because I'm going to hold this company for the next 15 years, and I think that this is going to be a huge company in the future. So that's essentially the mindset for that. But if you're looking for quick returns, then this company is probably not the company for you. So if you'd like any more updates on Mullen Automotive, Sofi Technologies, Tesla, as well as Palantir Technologies, remember to go and smash that like button right now. Comment down below what company you want me to review next, or if you want me to keep reviewing any of these companies in this video. Subscribe if you are new, and I will see you in the next YT video.